Welcome back, everybody, to another Tips for Mortgage reverse mortgage series. My name is Mike Parkinson. I'm a mortgage broker with Dominion Lending Centers in Kamloops River, British Columbia, joined by my cousin Jaden Bax with Avenue Financial in Crossville, Alberta. Good morning, Jaden.
Good morning to you, Mike. How you doing, buddy?
I'm good. Actually, it's lunch now here, and it's afternoon there as well. Yeah, I guess it's good afternoon. So
That's
I'm
right.
doing
Yeah, exactly. We'll give people some good information. They can watch this video over lunch while they're eating their lunch. Get some
totally,
great
man.
information.
Totally.
Right, ready to go for the day.
Exciting stuff. Anyway, yeah, we wanted to talk a little bit today in our reverse mortgage series about prepayments. What are the costs if you break your mortgage in the first 3 or 4 or 5 years? What options do you have to make some partial prepayments? How does all this work? In Canada, we have there's more than a couple of reverse mortgage companies, but there's two of the main ones, and we're just going to stick to the main ones for now.
Yep.
And basically, things to know when you get into reverse mortgages: if you get out of them, if you break them within the first 5 years, there's definitely going to be some penalties, and then there's things to understand. However, there's ways to get around the penalty, which you don't want to hear about. But we're going to talk a little bit about that as well. So basically, if you get into a reverse mortgage and you decide this is not for me, in the first year, it's typically going to be a 5% penalty of the balance, or 5 months interest, okay, depending on the company. And then it's 4% in the second year, 3% in the third year, okay? After 3 years of your mortgage, it's 3 months interest, basically. However, up to after 5 years, okay, there's ways to get around that, okay? You can put up to 10% of the amount owing. You're allowed to prepay that once every year up on the calendar year. And you can also pay your interest every month, which we've already talked about, Jay. Do you
Yep.
want to talk a little bit about how you do that?
Yeah. Well, absolutely. Like you have, one of the things you don't have to make a payment with a reverse mortgage, but if you're worried about, not digging into the equity of your home, absolutely, you can make those interest payments on a monthly basis. I believe
Yeah.
you can also do a lump sum against the interest at the end of the year as well. Is that correct, Mike?
Yeah, like up to 10% of the whatever's remaining, you can do that.
Yeah.
So you can basically, if you don't want your reverse mortgage to grow, there's ways that you can stop that from happening. So if that's really important to you and you can afford it and that's something you want to do, or maybe your kids want to pay that, towards that so it doesn't grow. There's all kinds of things that people can do, but there are options.
Yep.
One way to avoid no prepayment is after 5 years, as long as you prepay it all of it within 30 days of after your mortgage reset after 5 years, or you can give 3 months written notice to pay the whole thing off. And another way is you can pay it off at any time without a penalty if you pass away. So that's something, just so like when you're mentioning Jaden, people were a little concerned about leaving a legacy and penalties and stuff like that, when they do pass. So that's, if you do pass away, then it avoids all the penalties on the mortgage. So
Yeah, which I think if you're taking a reverse mortgage because of health issues, for instance, and you wanted to stay in your home and need some extra care, so you need that cash for that time. I think that's just a great. They're not penalizing you for what happens to
no,
all of us eventually, right?
exactly.
There's no penalties involved with that, which is fantastic. The other side of that coin is maybe you've taken, a reverse mortgage because of those health issues and it's developed in a different way than what you were expecting, right? And so it's just not reasonable to stay at home anymore, not working out for you or your family. Maybe you need to move on to an assisted living facility. There's still a penalty, but they're going to take whatever that penalty is, same penalties that Mike talked
Yeah,
about earlier, and cut them in half, right? So
exactly.
really, in the first 3 years, that can still be a relatively significant amount, depending on the company that you're working with. But at least they're cutting that in half and trying to make it as reasonable for you as possible, so that when you sell that home to go into that facility, there's still a pile of equity left to help pay for those costs, right?
Right. And just remember that when you get a reverse mortgage, they're not going up to 80% of the value of your home. Their
Yeah.
maximum's 55%. If you're, in your late 80s, the younger you are, the less you're going to get. So it is very conservative. So typically in the end, 99% of the time, there's equity left in the home. And if there's not, there's a no negative equity guarantee, which we've discussed before. One more thing that I wanted to mention is if you do, after 5 years, you do pay down a whole bunch of your reverse mortgage, they do want you to keep at least 25,000 outstanding. That's the minimum that they require to have a reverse mortgage. So just keep that in mind as well. But bottom line is, if you have any questions on reverse mortgages, give myself a call in BC or Jaden a call in Alberta. We're happy to go over all this stuff with you. And of course, when we
Yep.
work with our clients, they know everything inside out. We give them the information on the prepayment penalties, how everything works, and answer all their questions. So we're happy to help you guys out anytime. Give us a call, and we'll see you next week.
Okay. Have a great day, guys.